Good morning everyone. We are Ding, Step, Patricia, Nadia, and Veronica. We will present about the topic on Balanced Scorecard. Introduction. First of all, we will present on the limitations of performance evaluation using quantitative data. Quantitative data is data that can be quantified and verified, and is amenable to statistical manipulation. Next, we move to the performance evaluation using quantitative data in the perspective of traditional evaluation or traditional performance measures technique. The traditional evaluation is based on the information and techniques available in financial accounting, cost accounting and management accounting. There are some limitations of traditional evaluation. First, all measures are short-term focused. Many organizations collect information which are only financial and operational data. One can find all sorts of financial and operational statistics. The organization can tell you its overhead expense, income, profit, and any other figure from the accounting system. Second, it focuses more on cost and revenue data and less on the process. It provides misleading information. Third, it is without activity and process analysis, which are essential to decide the value-added and non-value-added activity and process. Business organizations have to analyze which processes are capable to fulfill customer requirements. Fourth, it tracks single dimensions of performance and does not provide an integrated or holistic view of performance. Lastly, it discourages teams of employees to work together. It is focused on measures of individual performance, where individuals are assessed, get promotions and raises, not teams in most systems.
Balanced Scorecard. The Balanced Scorecard was first introduced by accounting academic Dr. Robert Kaplan and business executive and theorist Dr. David Norton. BSC is a performance measurement system that is in terms of report where it consider both financial and non-financial information. BSC helps to identify and improve various internal functions of a business and their resulting external outcomes. It is used to measure and provide feedback to organizations. The Balanced Scorecard is used to reinforce good behaviors in an organization by taking 4 different business perspectives into account in order to understand and achieve organizational objectives. One of the company in Malaysia that is using BSC as their performance measurement system is Telekom Malaysia Berhad. Will be explained further.
A balanced scorecard can be divided into 4 perspectives used by managers to measure organizational performance. 4 perspectives are financial perspective, customer perspectives, internal business processes perspective and learning and growth perspective. Financial perspective. Financial perspective looks at top-level financial objectives and measures to answer the question, how do we look to our shareholders? Managers will establish a goals and objectives, select a way to measure it, select target to strive towards and then develop an actionable plan to achieve the desired target. Common financial measures include market share, revenue growth, return on investment and return on capital employed. These measures help the organization assess financial performance and identify problems areas to address. Next, customer perspective. The customer perspective include measures of the company's success in achieving customer value. Specific customer objectives are formulated, based on an understanding of customer value. In this area, the main question that need to answered is to achieve our vision, how should we appear to our customer? Specific measures that measure achievement of customer objectives may include customer service, new markets, customer loyalty, customer retention and new products.
Another perspective in Balanced Scorecard is the internal business processes perspective. Managers here are attempting to answer the question to satisfy our customers and shareholders, what must we excel in? This perspective focuses on the process, decisions and actions made by management and the employee of an organization.
The internal business processes may be those in the areas of operation management processes, customer service processes, regulatory and social processes and innovation processes. Measures that includes under this perspective are designed to monitor the internal processes that are critical to delivering products or services to customers and achieving financial strategies. The last part of the balanced scorecard is the learning and growth perspective. This perspective focuses on the capabilities of the organization that must develop in order to achieve superior internal processes that create both customer value and shareholder value. For this perspective, manager attempts to answer the question to achieve our visions: how will we sustain our ability to change and improve? This perspective concentrates on the infrastructure that firms put into place to deliver long-term growth and improvement. Measures may focus on human capabilities, example, measures of employee satisfaction. On information capabilities, example, measures the percentage of customer service employees having real-time access to customer information. And on the organizational capabilities, example, measures the number of employee suggestions made and implemented. Telekom Malaysia is using Balanced Scorecard to translate their vision and company strategies into a set of measurable objectives that can be interpreted into some meaningful form as a checklist to monitor the performance of the company. Basically, the Balanced Scorecard used by Telekom Malaysia is an EBSC where it uses an online system called MAPS. MAPS is an appendix to allow employees to key in their performance according to different areas concerned in the scorecard and monitored by each division managers. The main concern on financial perspective will be to grow revenue and manage the cost effectively. Customer perspective is to delight the customers while creating the synergy with partners. Internal business perspective is on execution of projects and plans on whether they are done effectively. Learning and growth perspective is to boost human capital and execution capacity.
Another feature of a strategic performance measurement system's balanced scorecard is the use of lead indicators and lag indicators. These indicators can be measured for each of the four perspectives of a balanced scorecard. Lead indicators. These indicators are measures that drive the outcomes and provide information that is actionable and manageable. On the other hand, it is a measurable business that changes before the activity starts to follow a particular pattern or trend. It's used to predict the changes in the business, but they are not always accurate. It is often related to the processes and activities of the business, and improvements in these indicators should flow through to lag indicators over time. Lead indicators are often used as the focus for process improvement or cost management. Lag indicators. These lag indicators are monitor the progress towards objectives. These measures provide important information for managers about the outcomes of decisions and outcomes of operations. However, it may be difficult to manage directly. Examples of lag indicators include the summary of financial measures, market share information, and even customer satisfaction measures. Causal relationships between measures in a balanced scorecard. This is the way how the four perspectives can be measured by the indicators. Financial. It can be measured through the economic value added. Customer. It can be measured through the customer satisfaction. Learning and growth. This can be measured through the employee satisfaction. And lastly, in internal business processes. It can be measured through the number of customer complaints, number of good units completed, number of product variation available, and the number of products under development. Objectives and lag and lead indicators for a balanced scorecard. The table shown below is the sample of the connection between the four of perspectives and lag and lead measures. In the financial, the objective is to improve returns to shareholders. Therefore, in lag indicator, it can be measured based on return on equity and economic value added. While, in lead indicator, it can be seen in the sales mix and cost per product as well. For customer, the objective could be to increase customer satisfaction. Therefore, in lag indicator, it can be measured based on customer satisfaction and market share. While, in lead indicator, it can be done on time delivery and the number of product returns. In the internal business processes, the objective is to improve the quality of products. Therefore, in lag indicator, it can be measured based on number of good units completed. While, in lead indicator, it can be seen in the product defects and number of product returns as well. For learning and growth, the objective could be to improve employee satisfaction. Therefore, in lag indicator, it can be measured based on employee satisfaction survey. While, in lead indicator, it can be done in improvement made to employee facilities. To be clear, here is a real case of Telekom Malaysia Berhad. By doing the balanced scorecard, it allows the managers to look at the business from 4 important perspectives. In the financial perspective, manager targeted to support the business and measure cost effectively. Therefore, Telekom Malaysia measured the total revenue and the main power cost. While in the customer perspective, manager of Telekom Malaysia tried to give excellent customer service outside the company. Hence, Telekom Malaysia measured based on the customer service index and timely respond to the complaints. In the internal business processes perspective, manager targeted to improve operation and process management. Therefore, Telekom Malaysia measured based on the competency development program and SIRIM audit. While in the learning and growth perspective, manager of Telekom Malaysia tried to improve the human capital among their employees. Hence, Telekom Malaysia measured the objective based on employee satisfaction index and percentage achievement towards desired Telekom Malaysia competency level.
How its use of balanced scorecard can help to ensure performance evaluation is done reliably. The use of balanced scorecard in performance evaluation can be achieved by help managers to monitor and control the delivery of a predefined set of activities which help the company toward achieving best practice and performance level. Besides that, balanced scorecard help in providing a powerful framework for building and communicating strategy. The fact that the strategy with all its interrelated objectives is mapped on one piece of paper allows companies to easily communicate strategy internally and externally. This facilitates the understanding of the strategy and helps to engage staff and external stakeholders in the delivery and review of strategy. Thirdly, through balanced scorecard, performance evaluation can be achieved by improved performance reporting. Companies that using a balanced scorecard tend to report performance and communicate performance better than companies that without such a structured approach to performance management. Thus, transparency can be met if companies create meaningful management reports and dashboards to communicate performance both internally and externally.